Good morning, good morning, good morning. What is that? We got light peeking through. Oh, I don't have the blinds down all the way. It's all right. We'll keep pushing. We'll push on through. Good morning, everybody. How you doing on this fine Friday morning, April 26, 2024? We got some data to go over. We got a week in the stock market to finish strong, and I'm looking forward to each and every one of those things. Good morning, Queen Latrice. Hope you're doing well. Had a good night's sleep. Didn't get to get my run in this morning, but I might get an afternoon run in if I can before some afternoon meetings. We will see. Had some work to attend to, but I'm still happy to be here, getting 1% better as we are each and every day within the Stock Options Made Easy community. If you're new here, you haven't been here, my name's Adam Holland, stock options expert market strategist, but really just student of life. We're looking to get 1% better each and every day. I feel like expert is always a relative term. It's more like keeping pace with or attempting to keep pace with, because the world changes every day. So we've got to change along with it. So I feel like really it's more so a pacekeeper with the times, a pacekeeper with what's happening and with innovations and things like that. I feel like that might be a more fitting term. But I'm excited for what we got going on today. Let's dive in. We have big earnings that were reported, so we got that to break down. We're here for one reason and one reason only. Because of that reason, we throw a one in the chat, right? You want to signify your intention to get 1% better by the end of this session. We want 0 days, right? 0 days. That's what we're looking for. Days where you've contributed zero toward your goals, where you've not made any progress toward accomplishing your dreams. Those are 0 days. We want at least 1% accomplished toward those dreams daily. That's what we're aiming for, and that's what we're about here. And you don't do anything with consistency without intention. You don't magically go to the gym 5 days out of the week because, oh, I just ended up here. No, you say, I'm getting up and I'm going to the gym, right? So when we throw this one in the chat, we are signifying our intention. I'm getting up, I'm here, I'm soaking up this information, and I'm executing on it, right? And then you follow through with it. You might say, "Oh, I don't need to drop the one in there." Well, are you following what we're going over here during these sessions? Are you making money off of them? It might be because you're not here with intention, right? People that are here with intention, they move. So make sure that you do the little things because it's the little things that causes the big results in your life. And if you think you're above the little things, well, you're always going to be beneath where you want to be, and that ain't where we're going to be. So let's dive into what we got going on today here. Big tech stunner, our top news. We got earnings from some household names. While Meta's heavy AI spending and light revenue outlook alarmed investors, huge investments in the new technology from other big tech players, Alphabet and Microsoft, are paying off. Both companies reported earnings that topped expectations across the board, cementing their dominance in the AI field and convincing investors that their huge AI bets are reaping more immediate returns. Meta kind of made it seem like it'll take a while before they get to monetize, whereas Google and Microsoft are saying, "Hey, we're already monetizing what's happening in our investments in AI." Search strength: Alphabet surged by double digits after hours on Thursday. Google up 11.6%, right? Google up 11.4%. Google, Google, up 11.6% after its Q1 results easily cleared analyst expectations with strong performance, particularly at YouTube. The tech giant also rewarded investors with its first ever dividend and announced a $70 billion stock buyback. Quote, "Our results reflect strong performance from search, YouTube, and cloud," said CEO Sundar Pichai. Quote, "We are well underway with our Gemini era, and there's great momentum across the company." He also noted that Google's AI offerings boosted core search results in the quarter. So that was really the key determining factor there. And I feel like, who knows, maybe they had this language already chosen before Meta reported. But I think they saw what happened to Meta and they're like, wow, Meta beat on earnings and the stock still tanked because they weren't reflecting the immediate ramifications of AI investment and integration. So we need to make sure that we do that. So Google said, not only, did we have strong search results, but AI fueled and boosted those core search results during our quarter, right? So we are immediately seeing some payoff from AI here, which is a big difference between what Meta did and what Google is reporting. And I think that, any of these big techs that report moving forward, if they integrate AI, they'll try to integrate the same language where it's like, whether or not it's true, nobody can really check, right? But if you beat, you want to say the reason why we beat is because this AI that we're spending money on is working. And I think if Meta would have said that, no one can really corroborate it, but if Meta would have said that, they probably would have had a completely different move, right? It probably would have been a 10 to 15% move to the upside instead of to the downside. Let's see here. Across the company. Okay, AI cloud boost. Microsoft rose 4.4% after hours on Thursday as the tech giant's Q3 results beat expectations, helped by AI adoption across its cloud services, and its forecast largely matched street estimates. Quote, Microsoft Copilot and Copilot Stack are orchestrating a new era of AI transformation, driving better business outcomes across every role and industry, said CEO Satya Nadella. To note, the company's AI-driven spending in the quarter was about $1 billion more than what analysts expected, but that didn't deter investors as it appears warranted given huge customer demand. In terms of seeking alpha commentary, investing group leader Ahan Bashi said while Alphabet is spending big on AI, it is on track to generate around $80 billion free cash flow in 2024. However, he is moving to the sidelines as its valuation is now too rich and long-term risk reward warrants a rating downgrade. Seeking Alpha analyst Livy Investment Research noted that Microsoft has a lofty valuation premium relative to its Magnificent Seven and broader tech sector peers. However, we remain confident in further upside potential given its expansive reach into AI opportunities across different layers of the value chain. In terms of, so, with these different players, right, checking them out and looking at them post earnings, we can look to see if we can integrate some post earnings strategy into what we have going on here. Both Microsoft and Google, potentially had the setup. If they would have kind of dipped a bit more after that initial run, it would have an even bigger setup. But we've still got room, from Google uh, to get a little bit of lemon juice out of that squeeze, that rind that we have left over. And same thing for Microsoft. So that might be on the docket this morning. But of course, we'll get into the nitty gritty details of that within the Facebook group. And if you're not trading with us, email me, adam@adamhollandeducates.com. Start putting your money to work for you in markets like we did this week very successfully. In terms of economic news, inflation fears. Don't expect the inflation picture to get much, if any, better when the Commerce Department releases its March data for personal income and outlays today. Economists expect both the PCE price index and core PCE, which excludes volatile food and energy prices, to rise 0.3% month over month in March. To note, Q1 GDP didn't rise as much as expected, but PCE inflation came in hotter, unnerving investors. Quote, this implies upside risks to the key monthly core PCE deflator and makes a near-term rate cut even less likely, said ING Economic and Financial Analysis. Even so, Treasury Secretary Janet Yellen affirmed that the fundamentals are in line with inflation continuing back down to normal levels. So PCE data we got this morning. And let's see, has it had any effect on markets thus far? Checking things out at 8:30. Looks like we dropped a bit when we got the data. We popped, and then we dropped since, and now we're kind of right back to where we were before the data came out. So not looking like too much of a change here. Let's see what we got going on. All right. Checking out PCE. Checking out PCE. Okay, US PCE price index month over month for March, actual 0.3% versus 0.3% estimated. So we were directly in line with PCE data month over month. So it was within expectations. We expected inflation, right, to go up by 0.3%, and it did. US PCE price index year over year, actual was 2.7% versus 2.5. Previous estimated was 2.6%. So it came in at 2.7. We estimated 2.6. So slightly hot on year over year, but month over month within expectations, year over year, 0.1, right, higher than what we estimated it was going to be. That's not seeming like, like it will be very impactful. Traders of U.S. rate futures contracts price in firmer chance Fed will deliver first rate cut in September. So yeah, that data isn't seeming very impactful this morning. in terms of it affecting or moving the needle for us after that opening bell. In terms of regulation, news, net neutrality, the Federal Communications Commission has voted to bring back net neutrality rules that had been repealed in 2017 under Trump's administration. The rules would prohibit internet providers from favoring or limiting certain kinds of traffic across the network by reestablishing the treatment of internet providers as Title II common carriers. The FCC also used its new authority to block certain Chinese firms from providing broadband services in the U.S. over national security concerns. The FCC's decision will deter investments and innovation necessary to connect all Americans, said Jordan Crenshaw, Senior Vice President, U.S. Chamber of Commerce Technology Engagement Center. Let me see what else we got going on here. Media NBA streaming discussions are ongoing for the National Basketball Association's next round of media packages, which will be effective after the 2024 to 2025 season. And competition is heating up. Amazon and Google's YouTube are vying for a new NBA streaming package. Meanwhile, Comcast NBC Universal has set its sights on a major TV deal currently held by Disney's ESPN and Warner Bros. Discovery's TNT. Both Disney and Warner have pitched paying much more while airing fewer games under a new pact. The company's exclusive negotiating window to renew their contracts has expired, allowing the NBA to negotiate with other suitors. Yeah, sports streaming and the rights to sports streaming continues to heat up. Yeah, one of those things that is I don't really know exactly why, right? Maybe these sports are just getting more popular across the board. It's because of the gambling partnerships, which are also, becoming a lot more fruitful. But it's just like we have all the media companies that are bidding more and more exuberant amounts of money for less and less coverage. I mean, we had what did Prime get one video? I mean, one football game last year. I can't remember if it was them or if it was Paramount Plus. Like, what the heck is the worth of bidding on one football game? So I don't know, but good for these networks, good for these leagues. It's definitely driving up the value of these teams. For anybody who is looking and investing in a professional sports team, it's definitely driving up their value. But I don't see it. Like they're arguing to pay more money to air less games. Yeah, it doesn't really seem like a winning tactic to me, but I'm also not deep in this space, so I don't understand the metrics behind it to criticize it or anything. But Disney with ESPN, it's good for them because that could mean that Disney has some negotiating leverage. I mean, they currently hold major TV deals with these broadcasters, so we'll see. We'll see what happens, but nothing immediate, that I'm seeing here that would affect how I view any of the companies involved, Amazon, Google, right, Comcast, Disney, until anything is announced. And even when it is announced, it's like I don't think it'll move the stock very much. Today's markets, we're looking pretty green across the board, literally everywhere except for in India. So no fun in India, but everywhere else we're pretty green. What else is happening? U.S. 2-year yield tops 5%. U.S. 10-year yield hits 5-month high after GDP data. Bristol Myers, ticker BMY, to cut 2,200 jobs as part of $1.5 billion cost savings plan. Anglo American rejects BHP's $39 billion takeover offer. Intel, ticker INTC, stumbles as weak guidance and AI foundry issues weigh. Cannabis stocks outperform as pressure mounts for rescheduling weed. Microsoft-backed cybersecurity firm Rubrik soars 21% in debut. Congrats to Rubrik. Got some friends at Rubrik. Got some Rubrik members here as part of the Stock Options Made Easy community. So congrats to you guys on that. With that soaring debut and the IPO. Much more good fortune to come. PG&E CEO, PG&E CEO Warren Buffett got it wrong on California wildfire risk. Paramount, ticker PARA, sinks amid report deal with Skydance is getting closer. Hertz slides 20% as depreciating Tesla's dead bottom line. Then Cleveland Cliffs CEO is still interested in acquiring U.S. Steel. Then BOJ keeps interest rate unchanged. Yen hits weakest level in 34 years. So that'll wrap us up today and this week for our pre-market prep sessions. Whether you are a member of a, multi-billion dollar tech company like Rubrik, right? Or, you're a member of the executive team of Hewlett Packard, or, whatever you're involved in, we have people within this community in all different capacities, right? All different capacities, in all different roles. And I'm proud of that. And I'm looking forward to continuing to grow, right? We've got people that are in sales, people that are in software, people that have their own businesses, right? We've got tons of different people, and there's one common goal, one common thread that weaves this beautiful tapestry that we weave each and every day and each and every week, and that is getting 1% better, right? So it doesn't matter whether or not you're making, 50K a year or 150, 250, 550, 5.5 million, right? This information that you get here is valuable to you when it comes to putting your money to work for you in markets. So especially if you're that person who's out here, you're a young professional, you're establishing yourself, you're looking to, take those next steps in life, making sure that your money is working hard for you is super important, because it's not just making 200K a year that is a goal, right? It's putting that extra money to work for you, not going out and buying a Benz just because now you can barely afford a Benz, or going out and, I don't even know, getting this Gucci and getting that, right? Don't let lifestyle creep seep in. That's what everyone who's successful that you study will say that. Do not, if you get a raise, don't live like you got a raise. Right, live like you're still in that same 50K salary. Because what do we need it for now, right? If you're under 50, you really don't need a lot of luxuries in life. You can get by with what you've been getting by with and still be completely fine. Because what you don't want is something else to happen, right? Some existential event that shakes things up, and now you're still living poor off of a multiple six-figure salary. No reason to do that, right? Put that money to work for you. Live in a way that's comfortable for you. Don't try and keep up with the Joneses, because nobody's going to remember it in 100 years. We're all going to be dust anyways, right? Make your money work for you. Live a nice, comfortable end of your life, right? Live a great life now that's focused on fulfillment and not on material things. And I guarantee you'll be able to look back on your deathbed and say, wow, I did it the right way. Right. So looking forward to keep doing it the right way with you guys. Have a great weekend and a safe weekend. I'll see you back here Monday morning for our next pre-market prep session. Have a good one.